All right, welcome back to another episode of my bad. All right, welcome back to another episode of the Silver Stacking Podcast. I am investing with TJ, joined by,
Silver Slayer, what's up, stackers?
and we are back. We haven't had one of these episodes in probably a couple of weeks now, but there's so much that's been happening within the markets that we have to talk about, everything that's been going on. But of course, the first thing that we have to do, it's pretty much mandatory at this point for us to do it, is give a shout out to our sponsors, Bullion Max. Now, Bullion Max here, they have some. The interesting thing about Bullion Max is that they actually have some pretty decent premiums for a pretty young company. Now, I know they've only been around for a couple of years, but check this out. So, I made this tweet, and my Twitter's investing with TJ. But if you go in here, well, first let me read this tweet out a little bit. Um, Today's online American Silver Eagle premiums range from 61% to
That's
71%
insane.
over spot, which is crazy to begin with. We'll talk about that shortly. But first, if you take a look here, the top one is Monument Metals. And then if you go down here, this is for American Silver Eagles only. It changes depending on the coin. Bullion Max is right in the middle above SD Bullion, believe it or not. SD Bullion
Like a
has higher
dollar.
premiums than
Oh wait,
Bullion
never
Max.
mind. Never mind. I saw I read it
Yeah,
wrong. But yeah.
and Bullion Max's ASCs are better than eBay's. Well, it seems like according to
Well,
Pinehurst
eBay's
Coin.
risky. Yeah. Oh yeah, Pinehurst Coins is a good site though. I bought from
Yeah.
them. I bought 4 tubes of Eagles from them actually at
Oh
once.
yeah?
Yeah, and 2021s, I think. Yeah.
Well, it's just
But
crazy to see how they're so young, but they're able to keep
yeah,
their premiums lower than SD Bullion. And of
yeah,
course, it looks like APMEX is the top at
of course.
71.42%, which
Yeah.
is pretty wild, you
Well,
know?
you're paying for the name, like just like
Exactly.
Nikes are so much more expensive than another company, even though the shoes are just as good, you're paying for that brand.
Exactly. You're paying for that brand. So shout out to Bully and Max for keeping their premiums lower for, in these times where most people are struggling with inflation and just general cost for just pretty much everything at this point.
Yeah.
So anything that, companies can do to keep those prices down is always appreciated from the customers. So definitely got to shout out Bully and Max
Yeah.
there.
And
Um,
there's also, if you want to, I don't know if you guys know, but they have a starter kit as well, which is 5 ounces at below employee pricing. If
nice.
you go to bullymax.com/silverslayer,
There
but
you
it's
go.
one per household. They do have a type 2 in the 5 ounce deal. So that's another way to get a type 2 Eagle for, a discount. But,
Yep.
but
Got
yeah,
one of those type twos from them right here. So
so do I.
yeah, yeah.
Yeah, I don't know how long that deal's gonna last. I know it's not gonna last forever. So, if you haven't got it yet, if you're one of those people that haven't, I definitely would.
Yeah, make sure you do because again, these premiums have been getting pretty crazy. So you might as well get especially ASCs in a bundle of other coins at below employee prices,
Yeah,
get that while that's still available because otherwise you're gonna have to pay, uh, well, a
yeah,
nice premium on
yeah.
top
I
of what
mean,
the
like,
coin
yeah,
is.
like if you put each one of those, because there's like a 2022 Britannia with the new security feature. There's the 2022 Kangaroo. Like if you put all of those individually in a cart compared to that 5 ounce lot, it's a big difference. So
I'm sure. So I mean, definitely. What was the name of the what was the link again for people?
bullymax.com/silverslayer, and that'll
Cool.
take you right to the landing page.
Cool, cool.
So
Yeah, and Silver Slayer's been working with the team to, basically, come up with these deals for you guys.
yeah,
So,
crazy ideas.
definitely, yeah, definitely thank Silver Slayer for
Yeah,
that.
my channel motto has always been I strive to innovate the world of precious metals, and I'm trying to stick to that. I've been thinking of crazy ideas, and I'll just shoot it at them, and they
Mhm.
just say yes or no.
100%. So, Silver Slate, what do you think about all these like premiums and everything? Because I know the thing recently that a lot of people have been worried about and concerned about. And for good reason, is the price of silver. It's been dropping, as you can see here on the screen. It hit a near-term high around April 18th. It was around 26.88. This is a closing price. But right after that, it started to go lower, and then we had a death cross basically on May 3rd. So obviously, people might be concerned with the price, but obviously, you wouldn't be too concerned if you're looking to buy because you're saying, "Hey, this is looking pretty good."
Yeah.
But as we all know, premiums are an issue, and as I just showed everyone, um, premiums now are 61 to 71% over spot, which literally is insane. Like
Mm.
if you think about it, um, at that rate, and I'm going to show this again because there's actually a bit of I had a conversation with somebody here on Twitter. So I shared this. Someone said insanity, and then I said the following: buying 2 physical ounces would be like buying three in spot. Because if you think about it, if it's 61 to 71% for just 1 ounce over spot, if you buy two of those, that's going to be more than it's going to be 120% over spot. So basically, that's a little bit more than 3 ounces of ASCs if you just think about it purely from spot. So
Why
things
you
are
don't
just
buy
so
Eagles?
yeah, yeah, things are just
Yeah,
so crazy
generics,
right now.
generics.
It's wild.
I made a video about that actually, how
Mhm.
I think that Eagles are going to start getting or being one of those coins that not many people buy. I mean, right now they're the most popular, but if those premiums are going to keep rising, which they're going to, especially since they're not making any progress with Congress, with the laws they're facing to fix that. They're gonna the silver shortage with them at least isn't going to fix itself. I mean, the article, the guy was even talking about this problem isn't looking like it's going to come to terms anytime soon for the U.S. Mint. So if they're going to have to keep rising these premiums, I don't see people continually buying them for too much longer. I think they're going to go towards, other cheap coins, maybe generics, maybe maple leafs, whatever is cheaper. But it's interesting because like they sold 5 million ounces the first month of January this year. I'm
Mhm.
curious the first month of January next year what those numbers will look like.
Yeah, seeing that year-over-year change would be interesting. And for you guys
Yeah.
watching, let us know in the comments section, are you guys currently buying ASCs right now, or are you going for another coin? Because like Silver Slayer said, my first stack was our purchase really were 2 tubes of ASCs in 2019. Spot at that time was about $2 over spot, and I believe in perfect. I actually have a calculator right here, so I won't look crazy. Um, but roughly, let's see what that is. Roughly, let's just say it was about 10% or a little bit more over spot when I bought. That's jumped up in the span of 2 years to about 60 to 70%. And this was online. I bought from SD Bullion. SD Bullion is close to 70% now. So it
Yeah.
goes from a little bit over 10% to 70%
You
within
see
two
that.
years. I'm definitely not buying these guys.
Yeah.
I'm going to hold on to this and I'm going after some other coins. Who knows? Maybe I might do it for like some giveaways or something, just to like give it away to people who might not be able to afford it. But as far as my personal stack, I'm definitely not buying
Right.
ASCs right now.
And there's a
Um,
pattern. There's a pattern. 1980 and 2008. Both times premiums were even higher than this. Every time there's like a recession, financial crisis, premiums go through the roof every time. And it was
exactly.
even, I think 1980, the premiums were like over 100%. Like it was an insane amount. Like I remember covering a video where like the price was like $9, but it was like 30, like something ridiculous. And I
That's
mean that pattern,
crazy.
yeah, every time that happens, I mean it's not just from like a shortage, like it's much deeper than.
And I know we have some older stackers here, so let us know if you're, of that age, you know, and you were stacking back in like early 1980s. What was it like for you during the whole Hunts brother thing? Were you glued to the TV or to, I don't know, the Wall Street Journal being delivered, physically? I don't know, just reading reading papers and stuff. Um, but I'm actually not hating on that. I actually want to do that one day. I actually want to get a subscription to one of these newspapers. But I'm just curious to know what that time was like if you were a silver stacker. So
Yeah.
if you were, let us know. But 100% premium over spot is insane. But it's good to know that those things are temporary. And that's the thing to
Yeah.
keep in mind. Like, if you are a big fan of ASEs and you want to buy them, just wait until things cool down because, like Silver Slayer said, these things do happen, but they don't last forever. So just keep that in mind. Maybe focus on weight other as opposed to, that, let's say high premium silver, semi-numismatic or what have you, and maybe focus more on weight, which is essentially what I want to start focusing on, just generics, um, you know, maybe heavier ounces. So like I won't be going after like maybe 1 ounces. I won't be going after those smaller denominations. I might be going more after 10 ounces. But some
Yeah.
people say 5 ounces are good as well.
Yeah.
But that's just my plan of attack when I'm ready to really like back the truck up a bit. Do you have a plan of attack right now? I think you just said generics, right?
Yeah. The best bang for your buck would be a 10-ounce generic bar.
Hmm.
I wouldn't go higher than 10 ounces though, because let's say the price does go up to 50, $100. You cut down the potential buyer by a lot. Not many people, or not as many people, will be able to afford a 10-ounce bar at that price than 1 to 5 ounce bars or coins. So that's why I always recommend don't go any higher than 10 ounces. Just pure because liquidity.
Right. Now, one of the things that Silver Slayer is that was a nice lead off too. Um, we were talking about this idea of recessions, and during those times, that's when we start to see those premiums really rise. Now, obviously, recession talk has been pretty much the talk of the town if you've been watching any of the, let's say, mainstream financial media. And I've been looking into it a bit more over the course of the last couple of weeks, just trying to make sense of things myself. And I found some really cool indicators for tracking recessions, or at least you could just say economic weakness. Now, the thing about it is, most people probably won't care relative to being a silver stacker or gold stacker. But if you are paying attention to silver demand and silver supply, there may be an impact to silver demand. Now, we all know that silver supply is forecasted to be lower than silver demand this year.
It
And I'm
rose
actually going to share my screen
demand
here.
demand rose 5% this year. I made a video about it the other day.
Yeah. And take a look at this. So I made this tweet basically saying the forecast silver supply demand dynamics fell from 2020 to 2021. The forecast for 2021 to 2022 shows that it will continue. Most of that increased demand should come from industry, as we all know, though global growth is a sensitive variable at the moment. So I want to talk about that soon for 2022 and maybe going into 2023. But as you can see here, um, look at the market balance. This is essentially that shortage, um, before our very eyes. 73, negative 51, negative 71. So it dropped pretty aggressively in 2021, still forecasted to drop. Now, for many of us, we may say, okay, so what exactly is, the supply demand bear case here? You know, what could potentially make it so that you know it's not that much of a difference. So it might be, let's say for example, what would take it to the point of it being at zero or maybe going to positive territory, which would be crazy. But I always like to look at those cases just for preparation. So if you take a look here, Uh, the main difference between the categories, and this is the demand side, we have industrial, jewelry, photography, silverware, bars, and coins, which is most of us. A lot of that difference between 2021 to 2022 for bars and coins, not that much. Silverware, a little bit. Photography, it actually goes down here on demand. Jewelry goes up a little bit. But for the most part, a lot of that movement is coming in from the industrial side. And then you have a bit of that coming in from photovoltaics. And I actually did the math here from 2020 to 2021 to 2022 for photovoltaics. A lot of people say that, silver will actually not be used that much in photovoltaics as time goes on because people want to transition to copper and aluminum. But from 2020 to 2022, out of total demand, or I should say out of industrial demand, uh, photovoltaics was it went from like 20% up to almost 25% for forecasted industrial demand. So it's still silver
Yeah.
still being it's still going to be needed for
Yeah,
photovoltaics, and
that's
it's only
silly.
been going up.
That's silly to say because
Yeah,
photovoltaics are PV cells, which are used in solar panels, and the entire world's going solar. And copper, the quality's nowhere near good enough, so it's going to be
exactly.
silver. Their only solution is trying to cut down the amount of silver they use in the solar panels, but they're never going to switch to copper. Like
Exact.
photovoltaics is going to
Mhm.
keep going up. I mean,
Yeah, and honestly, a lot of those forecasts were made like pre 2020. I don't know if you ever seen those articles, just like 2017, 2018,
yeah,
2019,
yeah.
and they'd be like, "Oh yeah, by like early to mid 2020s, we should expect to see photovoltaic demand go down." And it's like, well, it
And
doesn't look to
yeah,
be that way.
and that was before they knew the green energy revolution too. So that makes
Exactly.
yeah. So
And there's going to be a lot of demand coming in from what's known as green bonds from government. Government will is actually funding a lot of this infrastructure change, um, and they're putting out these green bonds for companies to take so they can start building a lot of this infrastructure. Now, here's the thing. Okay, so going back to recessions and its impact on silver and everything else, if we're looking at photovoltaics, I would say that, okay, what would actually potentially cause this forecasted number to not reach that peak of 127? What could possibly be the issue might come from the real estate market. Now, this is just kind of like my thinking. There really isn't too much here as far as what I can show you is like seeing like a direct connection. But I just want to show you guys this because I want to kind of get your take on this in the comment section. But let's go over here. So um, this actually comes from the Bank of Canada. And what I'm going to be doing is I'm going to be showing you guys the connection between high yield corporate bonds and employment growth. And we're going to talk about basically recessions. And then we're going to go a bit into real estate. So here's a tweet that I made. The Federal Reserve pays attention to high yield spreads. What is that? That's essentially large companies who put out junk bonds. And those yields are called spreads. So high yield spreads are junk bond yields. So as they have a predictive power for employment growth. So far, we've seen large tech companies like Uber state that they'll treat hiring as a privilege. So what do you think high yield spreads look like at the moment? So as you can see, they're going in opposite directions for the most part. So if Uber and a lot of these companies, you might have actually been seeing the Silver Slayer. A lot of these companies are doing layoffs. They're doing hiring freezes. They're not really hiring as much as they were several months ago. So if you look at high yield spreads, starting back in 2022 at the very beginning, basically, that's when we really start to see these spreads run up like crazy. So pretty much for the whole year, these high yield spreads have been running up, and we've been also seeing a lot of these companies saying, "Hey, we're not going to be doing that much hiring. We're going to put a pause on it, or we're going to do layoffs." Recently, the last few days, we've been seeing a drop off, which is good to see, which lets us know, hey, maybe this will cool down. and maybe they'll start hiring again. But if we're starting to see hiring freezes and potential layoffs, that's going to have an impact on just general industry and the ability to pump out as much product as possible. Some people may not be able to. The consumer, for example, may not be able to purchase as much as we expected because, hey, it looks like people might be getting laid off. People who may want, let's say, remodeling done on their homes, they may say, hey, well, companies may say, hey, well, we don't have enough employees right now. It's too costly for us to raise capital, which is the purpose of issuing these junk bonds. It's costly for us to raise capital now, and we can't hire the amount of people that we thought we could hire. So now you have all these delay times potentially for workers. And we're seeing this in the tech sector, and I'm wondering if this could also, spill over into the general economy. So, um, what we're also seeing is you might have heard about the real estate market, and new home sales actually dropped significantly in April of 2022. It dropped pretty much right off a cliff. And to show you that graph real quick, it's actually been happening over time, but take a look here. January of 2022, and in December, we kind of hit a peak. And then ever since then, it's just been dropping off dramatically. And as we've been seeing those Fed rate hikes happen, a lot of people are saying, well, hey, mortgage rates are rising aggressively. You can't expect people to pay those high prices for homes and also expect them to pay those high mortgages at the same time. Those home prices are probably going to come down. And if home prices come down, what does that let us know about photovoltaics? Well, maybe the demand for these solar roofs this year, not saying in general, but this year, maybe that demand may slow a little bit because some people will say, well, hey, I'm not buying a home. And if they are not buying a home, they may not want to do those kinds of investments. And even if they did buy a home, those investments would require labor. And as we know, there's a labor shortage. And as I just showed here, we may even have a issue with companies actually being able to hire people because they can't raise the capital to do so. All this points back to the Fed raising rates. Like, you can just make a beeline back to the Fed raising rates. So, going back to what I was saying before when it comes to silver demand and the potential for it to be less than what's forecasted, I would say the only place I would see it really impact would probably be photovoltaics. Of course, you could say maybe some people may not want to buy bars and coins because of premiums, but I think for the most part, stackers are pretty resilient. We're pretty much going to buy no matter what. We'll just choose different
Right.
coins. But potentially in industry, we may see an issue with with companies not not servicing customers because they may actually not have the customers that they need because they may not be buying as many homes. Now it's not we don't really know if this is going to keep up. We just had that monthly data come out saying, hey, we missed expectations for new home sales. So and also just to show you one last thing here, if you want to see the main customers for um, solar power, it's homeowners, who buy solar power generators. That's one type of solar power um, use case. House owners, millions of domestic roofs and developers slash architects of new buildings. You have city councils, many councils who own buildings with large roofs, corporations, many companies with large roofs. It all comes back to real estate. So if real estate is having an issue, we may start to see an issue with solar power this year, and that may have an impact on demand. Just this year, though. I think for the long run, we'll start to see more increased demand. But obviously, if we're seeing this economic weakness this year, it may have an impact on demand, and hopefully that'll bring prices down a little bit more for silver, so we can start stacking some more. But again, this is just my theory. Let me know what you think, Silver Slayer. I just went
Well,
through some
yeah,
things and
I
just
mean
pieced some things together.
that could, but when you also have like EVs, which is even, I think it's even bigger. I think that's, I forget what percentage, but I know EVs also have a big role.
Yeah,
So I
yeah.
don't know if it'll really hurt demand that much. I mean, yeah, I feel like because I've covered this before. I
Hmm.
actually, uh, I th- I don't know, man. I mean, it's up in the air, like you said. It's a theory. I mean, in the long
Yeah.
run, obviously, demand is going to keep rising. I mean, that's inevitable as the
Right, right.
world goes green.
Exactly. In the
And
long run, it's just gonna keep going up as
but
people,
yeah, I'm trying to think if I don't know if it would bring the prices down. Just if photovoltaics was the main, then yes. But there's also electric vehicles, which
right,
has
right.
has a really big pull as well. So that's really the debate there, and I've covered that in a video, and I really didn't know either. So yeah, I mean it's up in the air, but that is a good point, and I like how you even covered, like the homeowners and looked into what's the top, demand. Where's the demand coming from? Because that's interesting. That's really interesting, man. So
Yeah, I just piece things together. It's nothing set in stone. No one's really done like a hardcore study. Honestly, I just pulled up some things because I was just curious.
yeah, yeah, that's
But
yeah, same, yeah.
it's interesting to see. But as far as where things stand right now, we're still forecasted to continue the shortage this year, and I'm curious to see what things will be like next year as well. Because again, a lot of the shortage has to do with employment and some people, and also the starts and stops with the virus um, and obviously I was reading about a lot of these electric vehicles trying to come online. You have GM, you have Tesla, and they're gonna not only are they competing for silver, they're competing for lithium and other things, and it's just like there's just not
Yeah.
enough, to go around. I don't know what's gonna happen in
I
in
mean,
you know in this space.
literally every automobile company by the year 2030 is going to be electric. Like every
Mhm.
single one. That's the goal. So I mean, as EVs play the biggest, or if not, one of the biggest roles, like by then, what will the demand be? Like this year, it exceeded a billion ounces, like 1.112 billion ounces. Imagine in the year 2030 how many billions of ounces the demand would be. And then also by then, I'm sure most of the world will be solar, like which is photovoltaics. Like I can't imagine 3 billion ounces, five, like what? Like then you have silver lithium ion batteries, which is also silver and
Yeah,
lithium. I mean, and then 5G towers. I mean, like the demand, there's no way. There's not even 1% chance we can keep up with that demand. Not even close. It's just not
exactly.
possible unless
And
we
if,
find some other source, right?
exactly. And if you think about it, almost kind of like a stock chart or something like that, it's basically gonna keep going up, or I don't know how this is going to look on the screen, but up and to the right. And of course, it's not going to be a smooth line. It's going to
Right.
be kind of like this. So
Yeah.
obviously, there might be some times when it might pull back a little
Like
bit,
you
but the
mentioned,
overall trajectory is
yeah,
going up, you
like
know?
next year, like you said, that could be a down part or a down point, which would be a perfect entry point as well. But
And
it's
that's
yeah,
100%. And that's exactly my point. My point is, and this is going to get a little bit nerdy here, but uh, there are three different types of ways of looking at returns. Now, you can do dollar cost averaging, which honestly I think is the safest way for most people to get into most investments. But the safest way doesn't necessarily mean it's the way that'll give you the highest returns.
yeah. That's
So,
wow, wow. That
yeah,
that I could quote that. The safest way is not the most profitable way
yeah.
sometimes.
But here's the thing, it makes sense because it's like what a lot of people don't realize is dollar cost averaging is something called a harmonic mean. And again, not to get too nerdy with it, but there's arithmetic. I think that's what I can never say it, arithmetic or arithmetic. Let's just say arithmetic.
Yeah,
Arithmetic
that's
mean, there's geometric mean, and then there's harmonic mean. And literally, arithmetic mean will give you the highest if you just do your returns that way. Geometric mean will give you the second highest, and harmonic mean will give you the lowest. And effectively, when you're doing dollar cost averaging, it is, hey, every month I'm going to buy. So if it's $15, then it goes up to $20, then it goes up to $21. Um, and I can show you it. I don't think we'll have too much time to, but basically it gives you the lowest return, but it is the safest return. So and going back to just general investment anyway, safety basically means, that you should expect to have lower returns because you are adding more safety to your overall portfolio. It makes sense, right? Like when you add when you have, let's say, a portfolio full of all stocks, that's quote unquote riskier than having a portfolio mixed with stocks and bonds, right? Because bonds are less risky.
Yeah.
So when you have less risk, you should expect less return. Um, Even
High
down
risk, high
to your
reward.
exactly. So think about crypto, for example, right? Crypto is extremely risky, but because of that, you're open to higher potential higher return. So that's just something to keep in mind generally, even for our stackers too. So for dollar cost averaging, just know that, hey, it's probably easier to do it that way, but just keep in mind you may not get the quote unquote best return if you were to do accounting
Yeah.
of your purchases and when you decide to sell. But that's just put that aside. I think most people should just do dollar cost averaging.
Especially
Um,
beginners. That's what I
yeah.
recommend beginners do is like for the first year, whatever, just get like generics. And I used to recommend Eagles when they,
Hmm.
weren't 75. I would
Yeah.
say like just bulk up like that, get as much silver for as cheap as possible. And then during that year, you're starting to learn about other coins as well. So you're educating yourself. If you just jump
Exactly.
into semi-numismatic as a beginner, you're gonna get ripped off. But yeah, diversity. It's like putting all your eggs in one basket. If that basket drops, all your eggs are broken. So I would always just tell, or I recommend at least, just building like a foundation, and then once you feel like these markets a little bit, you can branch off to pandas and some higher stuff. So
Oh
it's
yeah.
all it's all there's no wrong way to stack really, but
And I think that's a perfect way to end because also
yes,
Zoom is going to kick us off too. So,
yes,
but I think that's a perfect way to end episode 12. This is an action-packed episode. I love
oh
this like
yeah,
condensed
yeah.
version, but it's been another great episode. Thanks again for watching, guys. Make sure to watch episode 11. And it's been another episode with Silver Slayer
We're
and
out.
investing with TJ. Thanks again.